It's Tuesday, which means another episode of Two Trades in 2 Minutes. Hey, Ross Givens here, head trader at Traders Agency and also a stock trader of more than 20 years. And every Tuesday, I try to hand deliver to you two low-risk, high-probability trade setups. These are stocks accelerating at faster rates in the market, in leading groups of the market, breaking out from tight consolidation bases. And these are the kind of plays where we can look for 30, 40, 50+% gains while keeping our risk at that kind of 7 to 10% level. And what we have right now, as you can see here on the chart, is a market continuing to make new highs. The NASDAQ Composite Index, it gapped up this morning to another new all-time high. It has been a huge rally over the last 6 months and showing no signs of slowing down. We had a little downtick here on Friday, October the 10th, when Trump threatened those 100% tariffs on China. He has largely walked that back. He is going to be meeting with President Xi. And so the market has shaken off those fears and ripped back higher, which has been the pattern really since April, as the NASDAQ is up more than 50% over just the last 7 months. And so, yes, stock valuations are high. Yes, we've gone pretty far, pretty fast, but everything I'm seeing points to even higher prices in the market. We have above average inflation. We're cutting rates into high inflation, which has always sent stocks higher. We have expectations of more rate cuts both this year and into 2026. We have strong GDP growth, strong earnings growth, and a once-in-a-generation technological transformation in the form of artificial intelligence. And so, again, everything points to going higher. And so until I see something different, I'm going to be looking for long trades playing the upside. So I want to show you two such opportunities I'm seeing right now. Now, when we look at the areas of the market that are leading, this is really, really important. You want to be laser focused on the top performing areas of the market. If your goal is to make money quickly and in an outsized way, you need to go where the dollars are flowing. And so by following the leading groups, we know which areas are rising the fastest and therefore which stocks to focus on. And so one area that has been a big leader for this entire rally is the nuclear space. So, just dipped here. Nuclear and uranium, nuclear and uranium, nuclear and uranium. And a lot of these stocks have made big moves. There's one stock I want to show you in here that I believe is viable right now. And the other stock is one of the big AI names. And of course, semiconductors being the big group of the AI space has been a real leading theme. So let's put up our 2-minute timer, see if we can get this done in 2 minutes, and I'll show you the two trades I'm looking at. Now, the first one is UEC. This is Uranium Energy Corp. It is a uranium mining stock, has had a tremendous run since the April lows. If you look peak or trough to peak, it's a 340% gain, but really just steadily marching higher. And one rule, and this comes from William O'Neill, the founder of Investors Business Daily, one of his big rules was after a big breakout, and this is a big breakout. I mean, it shot out here from $7 to 17. You always buy the first touch of the 50-day. This red line is the 50-day simple moving average. And the idea being a stock in a good stage 2 uptrend is going to hold above its 50-day moving average. Any dips to it are going to be bought if the stock is still in demand and continue higher. And as you can see, we touched, just about to the freaking penny. Here to the 50-day, it is bounced and now breaking out through this level. So I believe UEC, Uranium Energy Corp, is a buy here. If I were picking it up, I'd put a stop at the little swing lows for about a 10-ish% risk. I'd call it $12.60 a share. The other one, and this is a stock I talked about before that we were waiting on, is Palantir, PLTR. Palantir needs no introduction. It is the one of the leading AI stocks, a big commercial application. It's at a 10-fold run over the last 2 years. But again, unless I see signs it's slowing down, I'm going to keep riding this show pony, and it's put in our breakout pattern we look for. You get a big run higher, in this case about a 75% run over 3 months. The stock digests that move. You get some profit taking, some selling. They drive it up, and it puts in this little shallowing base pattern here. And what's happening is the stock is absorbing that supply. You're shaking out the sellers. You're getting the profit takers out of the way, those that are levered up. You're trying to bore people out of the stock. I didn't quite get it in 2 minutes, but we're close this time. And then when it exceeds that breakout level, in this case at about $189 a share, it's signaling that it is cleared through that supply and likely to go higher. So I like Palantir here at a buy at current prices. I think you can put a stop loss at about 10% right here beneath the lows, really probably 9% if you want to put it at like 171, get into the 50. It is going into earnings, so the stock does have earnings on Monday. So ideally, I'd like to see a 10-ish% gain going into earnings to hold through it. People trade earnings a lot of different ways. Some people like to bet on earnings via options. I take a bit of a more conservative approach, and that is I will risk my profits on an earnings call, but I won't risk my capital. And so if you go back and look at the typical move. Now, this stock, here is one where it fell on earnings, and that was about a 12% drop. Here's the last one where it beat earnings. It went up about 9%. This was a beat on earnings, and it went up, call it 20%. It's been mainly beating earnings, obviously, the last year or so. It's how a stock goes tenfold. So I think the odds it misses here are pretty low. But even if it does, the only time it failed to beat earnings was this drop over here. It's a 13% dip, and it came right back. So that's why I'm saying if I've got kind of that 8 to 10% profit, if I can see this thing up at 210, 215-ish going into earnings, 205, 210, I'm willing to risk that because just the thought that Palantir is going to fall 30% on a bad earnings just seems highly unlikely, given all the massive deals they're doing, the government contract support, and everything in between. So one Palantir Bible here on a breakout. Second, UEC buying this pullback here to the 50-day, both about a 10-ish% stop, both in leading groups, both in a strong market. And again, while nothing is guaranteed, this is the formula for getting into stocks that have big upside and doing so in a fairly low risk manner, using stop losses just beneath either the breakout area or a big support zone. Now, if you haven't already, hit the subscribe button down there in the corner. That way, these videos will show up in your feed. You won't miss a future 2 trades in 2 minutes, and you'll also see the other content I put out through the week, strategies, stock tips, anything I believe can make you money.